gentlemen, traders, welcome to the TMT Stock Market Strategy video for Thursday, April 28th. Well, the Fed spoke, not going to raise interest rates. We talked about that. It looked like that probably wasn't going to happen. There is some soft data that's been coming out. I didn't suspect her to raise rates anyway. You would just put a major monkey wrench in what she's trying to do is keep this market elevated into these highs, going as the exit of President Obama to go out at the highs, obviously. And I don't suspect, believe it or not, a big market mover until then. But I do suspect that we are going to get a bigger move, and that bigger move would be to the downside. Earnings have been dismal. We talked about this already. Not going to really get into it. Nothing has changed. Markets sold off, then initially, then started to pop. We're up. We were up again in the after hours. And gold, she talked about commodity inflation, and that would even suggest even possibly maybe she would talk the dollar up just a touch to get the commodities back down into a reality. Grains are up, crude oil up, gold up, all the precious metal sector is up, and it's something that you got to keep an eye on now because you take one little pin and you pop that bubble and you're going to see a big run for the exits. Everyone is long, and I mean long commodities and long equities. And bonds started to rally based on those comments. So she was a little hawkish, but a little more hawkish than the last meeting. So we have GDP numbers that are coming out this morning, and that's going to be a market mover for the dollar and U.S. equities. And like I said, be patient. But there's going to be some fireworks. And let's run right into the charts. I'm looking at the VXX Daily, the VIX ETF. And as you can see, we're into some decent support. And what do we have here? We have a beautiful, big bullish fallen wedge pattern right here. Okay. Usually we get a break and we get a back test, and then we continue with the move higher. You could just take this guy here and you would measure it from this corner here. So this is something that I'm watching, that we're at the lows here, guys. And even tomorrow, if we pop out, we want to see price move out of the Bollinger Band and then move back in. That's going to put a buy signal in for the VXX. And if that happens and we get like a massive rally, a pop up and run, I honestly think I'm getting even more excited to get short the market. And obviously we're not going to do that until we get a trigger. We don't just short the market because the markets are at elevated levels. We want to make sure that the markets run up, pause, and then fail. And that's when we're going to be looking to short. And follow your trading plan accordingly, okay? VXX. Now let's look at the dollar. Dollar, big bullish fallen wedge. We did have a breakout of the wedge, and we got a back test, and that's fine. We can have this come out and then back test. It's perfectly normal. We are into some big support here, as you can see. So I would suspect that the dollar run up. I'm not saying that it's going to make new highs, but if we get a little bit of a push, maybe to the 200, you're going to see commodities really start to sell off here. And I do think at one point gold and the precious metals have started a new leg higher, but not until the week longs get shaken out first. We could see here as prices moving lower. Let me just get rid of the arrows. You could see here that we have positive divergence, right, from our indicators, as prices actually kind of chopping around and moving back down at this point in time. So looking pretty constructive on the dollar. I do suspect the dollar to give a nice big show, a nice big run to the upside. Okay, now let's take a look at the spiders. You can see here we're at these lofty levels. We've been up pretty much all of 9 weeks straight, and you can see we're coming into some big supply. We are there already. It would not surprise me, guys, that the markets run up and then fail, and then that's when we start to come down. You got to realize there's nothing good out there. We have soft economic data. We're fully valued in the S&P, looking at 20 times forward earnings. And like I mentioned yesterday and the day before, Europe and and Asia are trading at a discount to the S&P. So if I was looking to get long here, I would not be looking to get long. I'd be looking to sell here, and I would buy Europe. Okay, and that's just if I'm still looking to get long equities. I would buy European equities, or I'd buy the Nikkei. Now, something that you need to keep an eye on because, at one point in time, when do you say enough's enough here? And again, we're trend traders and we look to buy, and we'll be buying on pullbacks accordingly. But you have to use extreme caution because at any given time, risk off happens extremely quick. Okay, Transports. Take a look at this. You can see here, holding steady on the on our downtrend line here. We held here, and we're kind of just sitting on top of it. And believe it or not, this is definitely a bullish sign, no question about it. You could even you could even say that this is a bull flag here at the upper end of support. You can see that pretty much nice little flag pattern here. So pop up, a little bit of a back test, and continue higher. It will definitely propel the markets to go higher. But you can see here we're kind of pausing, and we're kind of unwinding our overbought reading right now. And we do have a little bit of negative divergence in the transports, excuse me, based on our MACD and our RSI. Okay, so kind of keeping an eye on this real closely the next day or so. The GDP numbers are going to be pretty big, guys, so that's something that I really want you to keep an eye on. We have the IWM. You can see that we have a lot of overhead resistance here, and again, still lagging, doing quite well though, much better than it has been of late. But you see, we're into this big area of resistance, so you're going to see this area here, and then of course we can get a big pop up, but doing better than the other indices, and it is one of our leaders. So doing okay, but still, I treat this as rally as suspect, that I don't believe. And I don't mean don't believe, not that I haven't been and would be not buying pullbacks, but I don't see there's that much more movement to the upside. Coming how we've been so far so fast with absolutely no pullback, literally 8 weeks of just gap ups. And then April was a consolidation. Now, that I will say. April has been a consolidation month, but it's something that that you can't take notice that. The earnings season has been dismal. Nobody has been beating, very few. Technology is getting clobbered. We have to watch technology. Can't get a really good bull market run with technology and banks not really rallying. Now, the banks did do okay. We had yields rising, so the banks do well when the yields are starting to rise. But you have to be careful. And look at bonds, what the bonds did today. Bonds ripped to the upside based on what Janet Yellen's speaking. So somebody's wrong here. Can't have bonds go up, equities and commodities. Somebody's wrong in the room. And usually the bond guys are the smartest guys in the room, guys. So I'm going to leave you with that note, and watch out for the Q1 GDP. That will definitely be a market driver today. Have a great day, everybody. We'll talk to you tomorrow. Take care.